Coming up on Business Incorporated. World Bank says environmental pollution will cost some nations in North Africa 3% of GDP. Kenya set to get $200 million agricultural loan to improve food security. Plus, Ghana's government rolls out 6 tax relief measures to lessen hardship on citizens. Great to have you join us on Business Incorporated live on Channels Television. Begin today's show with market numbers from Africa. We're trading with mostly positive at intraday. The NSE index was down by 0.22%, continuing yesterday's bearish sentiments, while South Africa's GSE jumped by almost 1%. Elsewhere, the EGX30 in Egypt was also trading in green at intraday, up slightly by 0.13%. Kenya ended Monday's session negative. And markets we track in the Middle East, the trading mix. UAE, Dubai's main index, posted a stronger gain, about 0.77%, while the Abu Dhabi index was also up by 0.43%. Elsewhere in the region, it's a different story. The Qatari and Saudi Arabia markets in negative territory, down 0.19 and 0.04% each. And now to Europe, where the European Union is launching a plan to raise tens of billions of euros to boost semiconductor production in Europe and end the bloc's digital dependence on Asia. Let's hear more now from Chris Kobe, right there in Berlin. Great to have you, Chris. So what does this semiconductor production plan look like?
Well, if approved by member states, the EU Commission's plan could generate a total of around $48 billion. Now, that money could be directed to 3 different areas. Around 2/3 of it is to be used to subsidizing the chip industry into gaining a stronger foothold on the bloc. Around 1/3 of the money is to go to Chips for Europe, supporting pilot projects or the development of chip design. And finally, a small portion of the funds is to help get startups in Europe off the ground. Now, the funds would stem from existing EU budget money as well as from loosening existing rules on policy subsidy from member states, which ultimately could mean EU states subsidizing 100% of the construction cost of selected projects. Today, subsidies between 10 and 15% are the norm. So the EU is aiming to go all in here. The bloc's Industry Commissioner Thierry Breton is envisioning the construction of between 2 and 4 large factories in the EU, which are to build very small and energy-efficient semiconductors. The goal, according to Mr. Breton, is a Europe of mega factories which can live up to the demand of the bloc as well as to be able to conquer world markets, as he put it. But this is by no means a done deal. The proposal will need the approval of EU member states and the European Parliament, where opinions will vary between the ambitions of industrial heavyweights such as Germany, France, and Italy, and those of smaller states that are worried about closing off valuable supply chains with Asian countries. Some member states, led by the Netherlands and Nordic nations, will also resist any plan to widen the scope for state aid. Now, one of the beneficiaries, should the plan go through, could be Intel. The US high-tech company has been talking about investing in Europe for months. But it's not only about money and loosening subsidy rules. To prevent supply bottlenecks, EU countries are to install an early warning system. Should a shortage occur, at least a duo of EU states is to be able to mandate the Commission to bundle the acquisition of chips, and the EU is to also prohibit exports of these products.
Quite interesting, Chris. But, you know, what impact is it likely to have?
Well, the main goal will be to double Europe's semiconductor capacity from 10% of the world's value today to 20% by 2030. Now, the Commission expects the market to have doubled by then, which means today's production is to be quadrupled. If all goes as planned, the EU would expand its market position, but the overwhelming majority of production will continue to take place in Taiwan, China, and South Korea. And we also have to keep in mind that other countries are ramping up their efforts to spur chip production as well. The United States planning to invest more than $50 billion, and South Korea going much further than that. The country plans to introduce tax relief measures for the industry worth some $450 billion in the coming years. In Taiwan, the chip juggernaut TSMC plans to spend up to $44 billion just over the coming 12 months on new plans. Nevertheless, the EU wants to follow through on the plans, which are another indicator of a paradigm shift towards a more protective policy when it comes to strategic supplies and potentially security-sensitive high tech. Now, in a similar move, just days ago, the German government failed to approve a multi-billion-dollar deal that would have seen the takeover of a Munich-based tech company by Taiwan's Global Wafers. The EU will equip itself with the means to guarantee its security of supply as the United States does. For example, that's the words of Industry Commissioner Breton, Europe will remain an open continent, but on its own terms, he said.
All right, the stock markets were largely steady on Monday. Give us a quick market update for today.
Well, stocks in Germany showing only slight gains this morning. The DAX advancing around 0.1% in early trading. Inflation remains high on the agenda of investors. That's despite the head of the European Central Bank, Christine Lagarde, announcing yesterday that chances have grown for inflation to settle close to the ECB's target of 2% over the medium term. The word from the floor, volatility is likely to remain as global markets adjust to the prospect of tighter monetary policies, as well as geopolitical tensions between Russia and Ukraine. And there's a mixed fourth quarter earnings season, which will continue to roll out this week.
All right, that was Chris Cope right there in Berlin. Thank you so much, Chris. All right, moving on to the UK now. We see rising costs of living in the UK continues with energy costs biting hard. Let's hear more now from Juliana right there. Great to have you, Juliana. So, all giant BP has announced plans, to accelerate the greening of the company while revealing its highest annual profits for about 8 years. And this is coming at a time, households are paying more for energy.
Yeah, good afternoon, Laddie. I think Bernard Looney, the BP chief exec, would rather that the British press were talking about its plans to transition of being one of the first dirty oil companies to become net zero by 2050. But that's not the case. I think every business page here in the UK is talking about these mammoth, eye-watering profits of £9.6 billion in the full year for 2021, and this is compared to losses of £4.5 billion the year earlier. We know that 2020 was a pretty torrid year for oil companies. Planes were grounded, so there was no jet fuel. Lots of people were not using their cars, so the demand just wasn't there. But of course, as soon as the world economy started reopening again, the profits came back, and I think it's pretty difficult for BP bosses to stand up and celebrate the fact that fortunate investors are getting massive dividends, because the cost of living is really, really tough, particularly for energy bills. There have been major calls from cross-party MPs to put a windfall tax on lots of these oil titans, particularly those that benefit from pretty much tax breaks in the north of the country and in Scotland, because Britain wants to become and maintain its attractiveness for some of these businesses. So it's not great, and it does come at a time when energy bosses, including the energy regulator, are sitting in front of the business committee today, talking about the fact that £693 has been put on the cost of energy bills here in the country. So yes, of course, you can imagine BP is one of the top leaders on the FTSE today, but it does come at a time where lots of people are talking about profits and morality. I think a sentiment that business leaders don't really like to talk about.
Right, and some are saying they should actually pay more tax now. Anyway, the $40 billion deal for US tech giant NVIDIA to buy UK computer chip designer ARM has collapsed. Like everyone expected that deal not to go through it. It's still national security issues, yeah?
Yeah, a flurry of issues. As you said, a lot of people thought it was dead on arrival. Nvidia wanted to purchase ARM from SoftBank, actually, which is a Japanese firm, but it was originally a British company. SoftBank purchased it on some terms that it would still maintain its UK base, which it had done. And then all of a sudden, September 2020 comes, and there's this $40 billion deal mulling around. But as soon as it was announced, of course, it got everybody's backs up, particularly tech titans in Silicon Valley, British regulators, EU regulators, all really concerned because of the shortage of these really sought after semiconductor chips. These are chips that are put into iPads, iPhones, tablets, cars. You just couldn't get enough of them, and lots of these titans and governments were starting to reconsider whether they should start producing them onshore, which is why no.
All right, looks like we lost Juliana there. I don't know if we still have you, Juliana. Do we still
Across
have
the
you?
world. So all of the regulation was in, it had been stopped and it had been probed. Nvidia did try to appease some of the critics by saying that they would not pull up prices and they would not stop other firms from using the chip, but that just wasn't good enough. So no surprises that a joint statement was released by both firms today, calling the deal off, to much relief of some of these big companies.
Quite interesting. And I saw that the FTSE 100 was in the green earlier. What's driving sentiment now?
Yeah, it's still in the green at intraday. The FTSE All Share is up 0.35%. The FTSE 100 is up by 0.39%, and the FTSE 250 is up by 0.08%. In the currencies market, the British pound is up on the US dollar by 0.14%, up on the euro by 0.28%, and also up on the Japanese yen by 0.27%. It goes without saying that BP is one of the top risers, although we had a surprising fall by Ocado, the online delivery shopping app. Their shares fell by nearly 12% earlier today after reporting their annual profits, showing that operating losses are still occurring. In fact, I believe they increased from £53 million worth of losses in 2020 to £173 million worth of losses in 2021. And this is due to operational costs and HGV driver shortages. And we know that they have had a few warehouse fire accidents too. So shareholders not happy with their update.
Yeah, shareholders not forgiving there. All right, Juliana, thank you so much. Enjoy the rest of your day.
You too, thank you.
All right, now let's look at what's happening in Asia. We see shares in Asia Pacific were mixed, with Chinese stocks among the biggest losers. Regionally, by Tuesday market close in mainland China, the Shenzhen Composite slipped 0.97% to 13,325 points. The Shanghai Composite fared better, recovering from its earlier losses as it rose 0.67% to 3,452 points. Hong Kong's Hang Seng Index also fell 0.77% of its final hour of trading, with Chinese tech stocks in the city dropping. Alibaba plunged 2.26% and Tencent declined 1.3%, while Meituan slipped 1.95%. The Hang Seng Tech Index shed about 1.21%. Elsewhere, Japan's Nikkei 225 gained 0.13% to close at 27,284 points, while the Topix Index climbed 0.42% to 1,934. Shares of conglomerate SoftBank Group slipped 0.9%, with the firm announcing plans to take ARM public after a planned sale of the subsidiary to Nvidia collapsed due to significant regulatory challenges. South Korea's Kospi finished the trading day fractionally higher at 2,746, while Australia, the S&P ASX 200 climbed 1.07% to end the day at 7,186 points. And the U.S. stocks index futures were muted in early morning trade after major averages moved between gains and losses during regular trading as markets awaits key inflation data later this week. Futures contracts tied to the Dow Jones Industrial Average were up 83 points. S&P 500 futures gained about 0.11%, while the Nasdaq 100 futures were up 0.07%. During regular trading on Monday, the S&P 500 slid about 0.37%, while the Nasdaq Composite shed 0.58%. Both traded higher earlier in the day before reversing course during the final hour of trading. Each index managed to close above its worst level session. All right, so after the break, commodities market update is next. Do stay with us. This is Business Incorporated. Welcome back. Now for commodities market update. There's been an unexpected but massive petrol scarcity in three major cities, Lagos, Abuja, and Jos. Apart from productivity losses, it has led to traffic jams in these cities. It was assumed that the controversy surrounding subsidy had been resolved since the federal government of Nigeria's announcement of its decision to backtrack on its plan to end the subsidy regime. Now, let's bring in Maiwa again, our analyst, financial derivatives company. Tell us more. Great to have you, Maiwa.
Hello, thank you for having me. Good afternoon.
Good afternoon. So this scarcity came from nowhere in Lagos, and it's also, lingering in other states like Abuja. What exactly is responsible for this current scarcity?
Well, like you actually mentioned, this scarcity has been on for about 2 weeks now. It started in Abuja, and then we just started feeling it in Lagos over the weekend. Right, if you ask anybody, different people have different reasons for this scarcity. At first, we thought it was a result of power outage, which was due to the incident at Egbe Power Plant. Some people said they were expecting the removal of subsidy, and then different stories. But the real reason for this scarcity right now is that NNPC is trying to recall some poor quality fuel that was imported into the country through the direct sale, direct purchase contract. They imported fuel that had high levels of methanol and ethanol, which was outside of Nigeria's requirements, and it will be harmful to our vehicles and the market in general. So NNPC has been trying to recall this that batch of bad poor quality fuel that was imported into the country. But NNPC has assured us that they have available supply of petroleum to cater to people's needs in the country, but then there's still that fear. And also, I think it doesn't help that we had I think Nigerian Association of Road Transport Owners threatening to withdraw their freight services if the federal government doesn't address the rising cost of transportation that they face. So I think all of this is creating a lot of panic amongst Nigerians, and then so you have people at filling stations queuing, and then also you have some filling stations taking advantage of the situation and hoarding their supply, and so we have all these traffic jams and queues everywhere.
Yeah, it's quite interesting. But, after 8 months of decline, Nigeria's inflation rate rose to 15.63% in December 2021. Transportation is an important component of the inflation basket. Is this scarcity of petrol likely to have an impact on commodity prices and inflation?
Well, definitely it will. When we look at transportation accounts for about 6.5% of the inflation basket. Now, we may look at that as small, but as small as it is significant in its own right, right? So we look at it from transportation. If we look at transportation of individuals in the country, that's going to affect inflation. Now, when we look at commodity prices, we look at transportation. Logistics cost is also a factor in food inflation. We produce majorly in the rural areas, we bring them to the urban areas. But then when you look at it, transportation from the rural areas to the urban areas is mostly done by diesel-powered trucks, right? And so you wonder, if it's diesel-powered trucks, why would fuel affect the prices? But then these trucks bring these commodities from the rural areas to major parts of the cities like K2, for instance, Mile 12, and from these areas, these goods are transported into smaller markets in the cities, and then the mode of transportation into the market in the city is through fuel-powered vehicles, and so those ones use petrol, and so that's where the price increase in petroleum prices from maybe having to do the black market, buy from black market, would reflect in commodity prices. And so if this scarcity lingers for a couple of days, it's possible that the inflation results we see for this month, we'll see increase in inflation if this is not dealt with on time.
Yeah, I hope it doesn't linger. But, in spite of subsidy retention, we've seen a differential in the average price of PMS across, various states in Nigeria. The NBS data show that average petrol price in Kebbi, Abia, and Lagos states about 173, 180, and 162 naira, respectively. Why is there this differential in price of the commodity despite the subsidy?
Well, there are different reasons, right? First of all, we look at it. I think that there are different factors, but the major factor we have to look at is to consider location, right? Petroleum, when it's brought into the country, where's the depot? I think it's Atlas Cove. Atlas Cove is in Lagos. So from the depot, it has to be transported to the other states in the country, and so that is where this differential in price comes in. If the farther the location from the depot, from Atlas Cove, the more expensive the fuel will be in those areas. So if you're buying from Lagos, it's understandable that Lagos is close to the Atlas Cove, so the price is reduced. But when you are now talking of states like Nasarawa and all, you have to factor in that transportation cost from Lagos to these areas. But then we look at it, there's the Petroleum Equalization Fund, which was enacted in, I think, 1975, which was primarily set up to address a price uniformity and to compensate all these transporters who are disadvantaged because they had to transport to a longer distance to further states. But then, since it has been enacted, I don't think that it has adequately addressed this situation. So we still have this price differential, or some people are calling for that to be scrapped. That's left to the government to decide, since we can't really see that uniformity so far.
All right, Maya, but do you think the expected completion of the Dangote refinery will lead to, some kind of alignment in PMS prices across the country?
Well, I think we look at it from the transportation route. If the Dangote refinery is transporting from the depot to other depots in different parts in different states in the nation through pipelines, yes, I think we would see an impact. But if we're still using the road transportation system, I do not think that we might see a significant difference in what we see now, because the mode of transportation hasn't changed. So I think that if that can be addressed, then we'll most likely see a difference in the pricing of petroleum from what is currently obtainable.
All right, Maya, I guess it's how it's transported that would determine that. Maya Ege, analyst, financial derivatives company, thank you so much for coming on the program. All right, so moving on now, air pollution costs the Middle East and North Africa $141 billion per year, around 2% of GDP on average, increasing the need for a green post-COVID-19 recovery for the region. According to a World Bank report, environmental pollution will cost some nations in the region, including Egypt, Lebanon, and Yemen, more than 3% of their GDP, as productivity falls if residents cannot work after they or their family members fall ill from air pollution. And healthcare costs can be a substantial burden on both individuals and governments. The report singled out low environmental standards in the transportation and industry sectors, the use of low-quality fuel, and burning waste as the main drivers of air pollution in the region. And the World Bank will give Kenya $200 million to support various development projects to improve food security in the country. The bank said the institution is negotiating with the state on the new loan will be channeled to various agricultural value chains, as the World Bank is currently funding various projects in the sector valued at $500 million. It can be recalled that desert locusts invaded Kenya in 2019 and ravaged thousands of acres, posing a major threat to food security in the region, demonstrated the need for a well-coordinated, multi-sectoral and multi-stakeholder approach for migratory and invasive pest management. And as part of measures by the Ghanaian government to lessen the hardship on businesses and citizens, the Ghana Revenue Authority has announced 6 tax reliefs. The Commissioner of Domestic Tax Revenue Division of GRA disclosed that the move is to cushion existing businesses and households from the ravages of COVID-19 pandemic and creates more jobs. 6 tax reliefs include the exemption of people who earn about 4,500 Ghana cedis a year, and 375 Ghana cedis a month from paying taxes, as well as suspension of the payment of vehicle income tax on selected vehicles, including intracity commercial vehicles and taxis and city long-distance buses. The Ghana Revenue Authority also added that it will revise the application of the flat rate value-added tax scheme to businesses whose annual turnover is up to 500,000 Ghana cedis, and the other tax reliefs include a waiver of interest and penalty on tax arrears for all categories of taxpayers, the halving of withholding tax on gold exports, and others. All right, that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye for now.